All right, I want to take a second and talk about asset allocation, what it would take to grow in a hyperinflationary environment, which is what we're in, and obviously it's reflecting in the cryptocurrencies currently. And what you do is you invest against that and protect your portfolio, but you can massively grow it as well. It depends on time frame because again, this exponential rise in cryptocurrency is probably going to be around 3 months, and then transfer over to metals at that point because what we're talking about is investing in strategically in capital flight around the world. So let's talk about like investment level and what that buys you. So you have a general allocation of 10%. So we're assuming $100,000 is the safest way to go. If you do that now, that protects you multiple times. So that probably goes up about 24 times, puts you around the 1 to 2 million within 6 months. Very, very predictably. Again, if you look at my estimates from last month, what the returns would be and what the actual numbers are, my error rate is around 10%. But the predictions were, consistent growth, which paid off exponentially. So even though there is variation, it's variation against a hyper high growth environment that's very, very stable when you do it correctly. Okay, so you have metals and you have Bitcoin. So metals is the traditional way. Anytime you deal with capital flight, at the end of a currency, again, average is about 40 years. We were in about year 45 or so since the end of Bretton Woods. Every time that's happened, people went to metals and they ended up more wealthy at the end of it, depending on their timing. Again, metals price is still depressed. There's still great opportunity. You're not going to see the immediate payoff as a type of cryptocurrency, which is the new inflation hedge. Okay, so let's talk about different levels and what that buys you here. So 20K invested, allocated in between metals and Bitcoin, and that changes over time as we get closer and closer to a transition. You shift into metals and you balance out the portfolio 50%. So 20K invested now, and this is the time frame. So again, it really does matter on time frame because we're a month behind the ball as far as you see a couple 1,000% gains in a couple days or weeks, whereas now it takes months to get those same gains. So this is all dependent upon time frame of investment now. So 20K invested. How I'd allocate that is 12K in silver, because again, I don't know how comfortable you are expanding it, but 12K silver can inflate to $300 to $900. That's the projected inflation rate. Once price controls are released, once capital flight, again, you're seeing that in China, you're seeing that in Canada to some extent as they're doing a bank run right now because their housing market collapsed. You're seeing that in Europe because Deutsche Bank is having problems. People are pulling their money out of there. So, when you're seeing this kind of capital flight, metals is a good safe investment. You're seeing it about that could in the best case scenario protect the whole portfolio, but that's extremely tested. That's malleable. I think that's understandable. It is more depressed than gold as far as price, and so it has a higher upside. So again, if we're doing very strict as far as budget wise, 12K in silver. And I would do 1 Bitcoin for each of the girls to partition to them. So that'll accrue. It sounds insane when you look at the market structure and how capital is moving right now, the tests that the banks have run into cryptocurrency. This could easily inflate 5 to 10 years to $100,000, even $1 million. It's hard to project out that long. What I can say very, very consistently, as my Ethereum prediction is very, very consistent, up $100 already, up about 50% so far, and on my time schedule, Bitcoin's going to be at 13K by next year. So it was at 2K when I talked to you. It was at 1,600 when I invested in it. But it's going to be at $13,000, all factors considered, March of next year. Which means in multiple years' time, again, that can go up multiple times. So extremely good investment. You don't have to understand it or be highly leveraged in it at 20K. But it's enough to buy basic portfolio protection and 2 Bitcoins. Again, I would allocate that, just think of that as a gift to, Allie and Galley's college fund, because it could easily wipe out that college debt, give them a leg up in a challenging economy when they're going to be entering it. Okay, let's talk about one level up. Let's talk about 60K invested now. What we can expect, because we're talking about exponential gains over a couple months and then continuous gains after that, when all of that compounds on each other, and this is kind of why I have so much urgency going on a month ago. You're talking about we could have done this with 30K, well, gone all to $1 million. If you look at the numbers, it's very, very predictable. So 60K invested now, it would be allocated at the moment about 80% into Bitcoin type, the Bitcoin milieu, and 20K into metals. Again, over time, as I see things adjust and as I see the market breaking down, you get more and more into metals, which is going to inflate. So 60K, we can very comfortably say it would be around 600K to $100 million or $1 million. I would say 6 months into a year. And again, look at the returns, look at the numbers. It is very able to do. Again, but this market window is extremely. It's going to be tight. So you have 2 or 3 months, and dragging it on the feet just means that this number lowers. You either have to higher the investment level to catch up, or shorten the time to decision. Okay. So that's an expectation, and that's the expected time of failure. I would stretch that out to a year, but 600K to $1 million is completely reasonable. Look at the returns, you can totally see that. All right, 100K invested. So as you move up in expansion as far as investment level, and again, as you tighten up the time period, these predictions become more and more safe. So 100K invested, 1 to 2 million payoff. I would say 6 months to a year for that expectation to come accurate. I can be break even in a month. If you look at the numbers that I've been sending you and the growth projections, I think that is extremely reasonable as far as what I predicted and what happens. And again, I know the market. I'm predicting it day by day. The price moves, and keeping you updated if you look at the Ethereum emails. Okay, let's talk about the strategy of the allocation and why we would structure it the way we do. 80% silver. Again, it is one of the most depressed metals. It has multiple uses, and so there's going to be multiple different buyers. So there's buyers in the industrial level, and there's buyers in the investor level and jewelry level. So you're getting hit from both sides. It's been used for millennia for money. It's always been used as money. It's always considered like the people's gold, so to speak. So countries would trade each other in gold. People would just use silver on the day-to-day basis. In a barter economy, this can be useful. So you can tinker away at it. Like in Venezuela, for example. Again, it seems extreme for us. I don't think it's unreasonable at all that we could end up in a similar situation. One ounce puts you at 6 months of food, so 3 to 6 months of food, and you're getting 600 ounces at the 20K level. So I am being conservative in that, even though you're not going to see the immediate growth. I'm concerned that we're late to the game, and so doing some kind of metals soon is going to provide portfolio protection. but also allow you to ride out the storm. Again, 3 to 5 years we get out of it because of demographic reasons, because of economic reasons, those transition problems, those kind of things. So, okay, so 20% in gold. Again, there's not as much upside. It's already at $1,000 an ounce, and it's still, you know, it can inflate to $10,000 to $50,000 an ounce. It's always been used as money. The downside of metals is, yes, it can be confiscated, it can be taxed, and so these are the downsides of it. But it's actually designed, whether one fails or one succeeds, I doubt either or, but it's designed to protect against each other. So gold is more portable, and so that's why I like having some of it in the portfolio. There's ways to store it overseas. There's ways to put it in a gold bank account where you can just use it as a credit card like normal if you want access to it. Okay, let's talk about cryptocurrency and that distribution. So even in cryptocurrency, you've only heard of Bitcoin. There's about 700 others. There's only 2 very, very stable ones that have a long upside, that have, you know, 10 years of solid projections as far as where they're going to be. And again, I know the market. They're going to be here for a long time. They've already been around for 10 years. They've gone up consistently, exponentially, but right now we're at the very beginning of a explosion of cryptocurrencies as far as returns go. And so this is why I'm urgent about it, because, you know, we could have done a month ago with 30K what we can do for $100,000 now. We can get the same return, so we could have done that easily. So this will multiply by about 5 times by next March. So anything we put in, you times that by 5, a little bit less because that prediction was at 2K. It's at 2.5K now. This is going to go up to 13K by next March. So whatever you want to do, multiply that by 5, and that's what your return on Bitcoin is. Ethereum. So Ethereum is a kind of businessman's Bitcoin. It has contractual integrations with it. So if you're actually selling your house, you want to move it in Ethereum because you can put contractual stipulations within the money itself. Again, you don't have to understand it. It is 100% going to grow. I've been giving you daily updates. The majority of my investment now is in Ethereum, and it is growing outstandingly. So that's a high growth one. That is, you know, a second tier coin. Eventually, this portfolio transitions all the way into Ethereum and Bitcoin. And I'll talk about security. I'll talk about, you know, what your concerns about the government, and, you know, how it's easily navigated. So 20% in specs. So right now my specs are up 350% within 1 week, which is incredible. Now this isn't even the best. I've seen 10x gains. So we want to reserve 20% just for catch up, to boost capital levels, to increase compounding. Again, time is of the essence here, and so I understand completely what the spec cryptos are doing, and where the garbage is and where the gold is. So again, I'm seeing exponential gains. I'm working with much smaller numbers. There's great, outstanding opportunities for growth here. Time is completely of the essence. When you're seeing these exponential figures, I have to recalculate that. If we wait weeks, we wait months, this door is rapidly closing for this. But again, just something to consider and some basic price projections. All right, take care. Bye-bye.